Welcome, ladies and gents. My name is Advent, as you may know me from the internet, and others may know me from real life. This is the Trader Circle, essentially where you guys ask me anything you want. You can share your experiences, share what works. It's really kind of just like an open forum to speak on whatever you want, honestly, as well as having me for support to help answer any questions or any issues or struggles that you may have. Of course, as always, I am not a financial advisor, so anything that you guys may see here or on the recording or whoever's watching on YouTube, wherever you're seeing this, this is not financial advice. This is strictly for educational purposes. Trading does have its risks, so please do your research before you engage in trading. And with that out the way, before I started recording, for those who are watching the replay, we were talking about like broker and different platforms and things like that. So for those who are using like Robinhood and stuff like that, personal bias, my personal opinion, get off of Robinhood and use, well, I'm not going to tell you what to use, but what I have used before is Webull. User interface, super easy. But I mainly use Thinkorswim now. That's basically all I use when I'm trading. I trade options and futures. While on Thinkorswim, you are charged 65 cents per contract. You do have the ability to call Schwab and be like, hey, you know, I used to be on Robinhood or Webull or whatever it may be. Or even if you're new to the platform, be like, hey, look, the 65 cents add up. So is there any way that we can lower it down? I can send you my trade log from my other platforms. I don't know if Robinhood has it, but I know for a fact that Webull had it. So I downloaded mine for like the last like 2-3 years before I started using Thinkorswim, and then I send it to them. And they're like, all right, cool. Looks like you have enough volume, so we'll lower it to this amount. And the more you trade, the lower they'll bring it down. I think the lowest not that I've seen for my account, but that I've heard somebody that I know, they pay like I think 20 to 25 cents a contract, but they move a lot. They move a lot of money. So, but still, whatever you can save, it adds up at the end of the day. Cool. So with that being said, I will start going over questions. Cherokee asked, where do I start if I have to begin with the strat? I really need to start from scratch and learn. So with the strat, you really want to focus on just the scenarios, and then from there you can branch off into the other things like broadening formations, time continuity, so on and so forth. Just so you have a basic understanding of it and what they mean. For example, scenario one, actually, let me go on TradingView because I enjoy it a lot better. Let's go to the 4-hour. So this is the Bitcoin chart that we're on. So for the strat, there's 3 scenarios, as Rob Smith mentions. There's the 1 bar, which is an inside bar. It signifies consolidation, chop, nothing's really happening. Prices going side by side or, sideways. It's not really doing much. It's waiting for the next move. Scenario 2 is, let's go on the 1 minute so you can see this live. So scenario 2, there's 2 different versions. There's a 2 down. Oh, I'm not sharing my screen. Duh. Thank you. There we go. Can you guys see my screen now? All right, perfect. Thanks for pointing that out because once I get started, I just get lost in the mix. Thank you. All right, cool. So everybody can see my screen, right? You see the candles moving up and down, all that good stuff. You can come up mute and say yeah too if you want. All right, cool. In the chat, they're saying yes. All right, so with the strat, there's 3 scenarios. The scenario 1 that we can see here is an inside bar, signifies consolidation. Then there's scenario 2, and there's 2 different versions. There's a 2 down, as we can see here, breaks the previous low. And then there's a 2 up that breaks the previous high, the previous candle's high. And then there's a scenario 3 that breaks the high and the low of the previous candle. And then with those different scenarios, you can get different setups. There's like 2-1-2 setups, 3-1-2 setups, 2-2 setups, reversal, bullish reversals, continuations, all that good stuff. So right now we have a 2-1 setup, and now it triggered a 2-1-2 down. It's about to change to 2, but so we can see here that it broke the low, so it became a 2 down. If it breaks the high, it'll become a 3 up. In this case, we're continuing down lower. So if you are new to the strat, you can go step by step. Do you have the strat ebook, Chericum? All right. So did you find me off of Discord, IG, Reddit, any of those? Discord? All right. Send me a DM on Discord, and whoever doesn't have the strat ebook, just send me a DM as well, wherever you know me, and I'll send it to you. And then we'll go from there. But to give you a little what it consists of, let me just bring it up real quick. Where is it? Give me one sec. There we go. So yeah, the strat ebook, it'll just go over all the components of the strat. You know, like Rob Smith created it, so on and so forth, what they mean, the different candle numbers or the scenarios, so on and so forth. Something to note in the ebook, there's like a bunch of different scenarios or combinations or setups rather. You don't need to memorize all of them. If you're starting out, as Rob Smith always said, start with like 3 of them: a 2-1-2, 3-1-2, and like an actionable signal 2. Just keep it simple, and then you can branch off into the other ones. Do you use the 1 bar as an actionable signal? Absolutely. I love the inside bars, Patrice. So like right now, we're getting another 2-1-2 bullish reversal to the upside. We'll see if it turns into a 3 down or what happens here. But yeah, my go-to setups are 3-1-2s, 2-1-2s, actionable signal 2s. Actionable signal is a hammer or a reverse hammer or a shooter that they call in strat terms. So those 3 different setups I usually look for. It could be a reversal or a continuation. It doesn't really matter. If it's a continuation, though, I would prefer like a Momo shooter or like a Momo hammer setup, which I can go over later if need be. Cool. So yeah, just start with the strat ebook. And then also on my YouTube, I have a bunch of material on the strat, like of the components. I just still need to make a video on time continuity, which I'll probably do this week, and I'll let you guys join live. And
all Tanya put was like,
people's mics are hot. I muted you guys, so if you want to talk, just let me know. But yeah, hope that helped. Just start with the strat ebook and some of the things on my YouTube and go from there. And take your time with it. It took me like realistically probably like a good like 4 to 6 months to fully understand the strat. TTOs took me like 6 months, but to be honest, I was just being lazy because I didn't understand it, and I just didn't want to put the time to it. But I hunkered down and fully understood it after a while. So take your time with it. Cool. More questions, please, or anything you guys want to go over. Cool. Reversal 2s meaning fail to? Not necessarily. A reversal 2 would be, so let's say, for example, right here, it's a 2 down, 2 down, 2 down, 2 down. So it's a 2 down continuation, right? So we're bearish. It's a bearish continuation. Once this candle here broke this high, it became a bullish reversal. So that's what I mean by, reversals. So we had a 2 down, 2 up reversal. Down over here, we had a 2-1-2 up reversal. Then it became a 3 down, and now it's continuing the downward trend. That makes sense, Cameron? and I break down a TTO? Absolutely. All right, let's look for a TTO. Any clean ones here? Let's see. Oh, nice W. So I will, of course, Bitcoin is pretty choppy. Let's go to NVIDIA. Was it NVIDIA? Yeah. So a TTO is just it's a pullback before it continues in the trend. Yes, Walter, the strat can be used on any time frame. It was mainly designed for swing traders, but us as option traders, well, at least for me anyway, I mainly day trade with it. I also swing trade with it, but I mainly day trade with it. But when it was first created by Rob, they mainly swing traded. They didn't really day trade that much from what I remember and what I was told. But you can definitely day trade with it. I do it pretty much every day. So for TTOs, they are essentially just pullbacks in the continuation of the trend. So TTOs, they'll be used to let us know or to help us get into the best possible, excuse me, into the best possible entry so we're not chasing a trade. For example, let's look at NVIDIA here. So the trigger to go long on my with my levels was all the way down here. So we had a gap up. We had a big gap up, about 32 bucks or 33 bucks. Now, just because it gapped up, I'm not going to buy calls immediately at market open. That's dumb. Because let's say I buy calls and then it just comes right back down and then I get stopped out immediately. If it's going to be a trend day, you just have to wait for the TTO to set up, which it always will if it's going to be a trend day. Now, I specifically look for TTOs on the 5-minute and the 15-minute. I don't really bother with anything else. I just want to keep trading as simple as I can. So a bullish TTO, as we can see here, and a TTO stands for triangle day out, for those who are not aware. Rob liked to make a lot of different terms for different things. So a TTO, triangle day out. To give you an example, right here, we have a TTO. We have the push up, the push down. It can like form a triangle per se. And then, they're out of here. They keep on heading higher. That's kind of like the idea of the name, at least from what I imagine anyway. So once we get this push up and then the pullback, we're going to take this 2 up right there. So it'll look like this. Let me actually zoom this in. So I'm going to go long as soon as the next candle breaks this high and it reverses us back into bullish continuity. Because clearly the 4 hours bullish, the daily is bullish because it broke above this level, and the 1 hour. So I'm just taking a reversal off the 5 or 15-minute back into the trend. So I would go long on this candle right here. Let me zoom in. I would go long. Let's bring this back. I would go long on this candle as soon as it breaks this high. For strat users, we do not wait for the candle to close. As soon as it breaks the candle, I'm in there. I'm not waiting, because if you wait until the candle closes, you're too late. And then my stop loss is going to be, in this case, I'll put it under this hammer right down there. And then for NVIDIA, I personally take profit every 5 points. But for a TTO, you can aim for the high, which will be right here, like this. So the second candle would have hit your first target in 10 minutes. That's a winning trade right there. Me personally, I would have been stopped out for my runners or my other positions. Like let's say I bought 3 contracts, I would have been stopped out here because this next candle came back to my entry. As soon as a trade hits my first target, I immediately take profit for some of the contracts, and then I'll move my stop to break even for the remainder of those contracts. Just so you never want to let a winning trade go red. ever. So this next candle here would have stopped the rest of my positions out in profit. However, like I said, you'll catch multiple moves to get back in the trend. So if you missed this initial one, or if I got stopped out here for the rest of my position, I could have also entered in here. That's one. So we have this TTO there. We have another TTO there. And yeah, sure, you could enter in here, but I prefer TTOs to like move up and like kind of gradually move down and then keep on heading higher. Does that make sense? Questions on that? And if you don't get it, again, don't worry about it. It took me a while to fully grasp this.
I get it a little bit more after you work it down just now,
Excellent.
by the way.
And Patrice, in the Discord,
Huh?
let me bring the screen up real quick. Hold on, let me go here. So in my Discord, just go to the, where is it? The playbook setups, and I've added it in here too for the TTOs, like different ones, so you can kind of gauge how it looks and stuff like that.
Okay.
And whoever's else in there. All right. Can we get the Discord link as well? Absolutely. For whoever's not in the Discord, it's $25 one-time payment to get in. Lifetime access. I am going to change it to monthly starting in January of the upcoming year, but whoever gets in beforehand will never pay that. You're grandfathered in for free. So whoever gets in for 25 bucks before January of 2025, you'll never pay another dime besides those $25 one time. Let me just get this link for you guys that don't have it. And of course, I don't have it ready. I have it here. One moment. There we go. Cool. I posted the link in the chat, so you guys can click on that. 25 bucks to get in, lifetime access, and you get grandfathered in when I change it to a monthly subscription in January of 2025. All right. Shania asked, and am I pronouncing your name correctly? Is that Shania or Shania? The first one or the second one?
Shania, the second one.
Perfect. All right. Thank you. Do I enter a manual stop after taking profits? Yeah. So let's say, for the sake of the conversation, to make this make sense, let's say, so this is my entry. And let's say for the sake of the conversation, the contract is worth 1.00. And then my first target, again, just making numbers up, target one, the contract will be worth 1.40. And then my stop loss, let's just say that it'll be worth 0.70 or whatever. So once I get in at 1.0, and let's say I have 3 contracts, I'm gonna take one of them off at, well, I'm just making those numbers up. They're not actually true to whatever we're trading. I'm just making it up to make it easy for us to follow. So let's pretend that our entry, we paid $1 or $100 for the contract. And then our first target is 1.40. So if I have 3 contracts, I'm going to take one of them off at 1.40. And then my other contract that I had set to 0.70, I'm going to bring up to 1.00 or like 1.02, 1.03, just so if it does come back to my entry, I get out with something. So that's what I mean in the sense of like when I like basically I manually update the chart and things like that. So that way, and another example for those who will probably ask later on, which was a question. Let's say this is target 2, and then the contract is like 220 or whatever it may be, right? Once I hit target 2, I'm going to take another contract off, and then the last contract that I have left that's still at near my entry, I'm going to move up to target 1. So now I'm going to make my stop 1.40. So if it comes back against me, I'm still going to, I'm still gonna get that money that hit target 1 if it pulls back to that level. And then you slowly keep on moving your stop up for the remaining contracts until I get stopped out. That way I can squeeze as much juice as I can out of the trade. Did that make sense? Any questions on that?
That only works on Thinkorswim, not Robinhood, right?
Robinhood, I haven't used Robinhood in 3 years, so I can't say yes or no. As far as I know, I don't think so. I used to do it on Webull and I do it on Thinkorswim. So whoever's on Robinhood, get off. Anyway, I noticed you formed the gap on NVIDIA wick to wick. I formed the gap wick to wick? What do you mean? Like this box that I drew? Well, this box, I just did it there. So if I go to the higher time frame, I don't lose the day that we were on. So I can be like, all right, we were looking at this day. The box is just there to make it easy for me to find it on the chart when I go to the other time frames. That's all that is. Where do you draw the gap up from? I don't draw the gap up at all. You can draw it if you want to. Like, you can get, if you use trading view, just, connect the top of that candle to there, and then there's your gap. But I don't draw the gap. Oh, one thing I forgot to mention, for the strat, we only use regular trading hours. We do not use extended. You can use extended to get like pre-market levels and stuff like that. But when you're trading the strat, no extended data, because you're going to get incorrect time flips and incorrect candles. Let's see if I can show you guys an example. So NVIDIA, we have a 3-1 on the 4-hour. What the heck did I just press? Oh, interesting. Huh. Did not know this existed down here. Cool. Anyway, so extended trading hours, we have a 2-2-1. That is incorrect. We actually have a 3-1 setup. So you always want to get your numbers or your levels from regular trading hours when you're trading the strat. Something to keep in mind of. Chericum asked, what time frame do you use for trading? Also, do you wait for time frame continuity to happen or not? Not really. Like, even if it's mixed continuity, I'll still get into the trade if the setup is there. Like for NVIDIA, if it triggered a 3-1-2 down, I'll take it to the downside, even though everything is bullish. And I'll take profit every $5 that goes in my favor. Now, if it's like a 4-hour time frame and everything is bullish, and I'm trying to take a bearish reversal on the 5-minute, I'm not going to do that. That's silly. Unless it's off of broader information, then yeah, I'll take a reversal off that. That's I don't mind that. What time frame do I use for trading? When I'm day trading, I only use the 4-hour, the 5-minute, and the 15-minute. That's it. I don't bother with anything else. Of course. Cool. All right. Let me go over some questions that you guys asked in the questionnaire real quick. Where are the questions? Here we go. All right. Shauna is not here, so we won't be answering that. Remember, guys, and for whoever's watching this on the replay, I require you to be here live for me to answer your questions. If you ask a question in the questionnaire, you're not here, I'm not going to answer it. I like talking to human beings, not texts on a screen. Cool. What were the time frames? So if I'm day trading, the 4-hour, the 5-minute, and the 15-minute. The 5 and the 15-minute, I only use for TTOs, or if I'm going to take a reversal off of broader information. And then I mainly use the 4-hour to get in on my initial entry. All right. second question from the questionnaire. Crystal, you are here, so I will definitely go over your question. Crystal asked, selling covered calls on Webull and selecting high dividend stocks. So let me see if I can connect this. I was having issues the other day where it wasn't connecting my. Let me stop sharing real quick. All right, let's see if this works this time. Actually, let me log in first because can't have you guys seeing my password. Where is this? All right, paper trading. Actually, I don't think it'll show up on paper trading. Let's go do it live. Just give me 1 sec to pull this up. Let's go on NVIDIA. All right, let's share this screen. And hopefully my phone should pop up in a few moments. If it doesn't, then I'll probably have to try a different way. Or if you guys can open up the app with me, I can walk you through it step by step. But let's see if it works this time. Because it just kept on loading for whatever reason. Maybe I have to update my phone. Who knows? All right. We're going to do it the bootleg way because it doesn't want to work. So what you're going to go ahead and do, I'm just going to screenshot this. And then I'm just going to send it to myself on Discord, and then I'll bring it up there. So all you're really doing when you're selling covered calls, instead of buying the call, you're just selling it and you're using your shares as collateral. So let's hide that. And let's go here. All right. Mike, I'm going to use, actually, let me not do that. Let me just type it in the regular chat. Give me a sec, guys. I just want to get this out the way. All right, cool. Well, that isn't working, so let's do this instead. And let's bring this back up. All right, so when you're in the options chain, you guys can see this screen, right? We're showing the contracts and the delta, all that good stuff. You guys can see that? Cool. So to sell a covered call, all you're really doing is just clicking on whatever call that you want to sell. And instead of hitting buy, you're literally just selling it. So on the order screen, you're just hitting buy, sell, and that's it. And it'll use your shares as collateral. When I sell premium, or if I'm selling covered calls, I'll use setup sometimes. Like even if I want to day trade it to sell premium, you're just doing the opposite of what you would normally do. So for example, let's go back to trading view. So for example, let's say in NVIDIA, if I wanted to sell calls, remember selling calls is opposite. If you're selling a call, you want it to trigger bearish because you're collecting the premium. If it goes away from the strike price of your covered call, you'll make more on the position. It'll lose value, which is what you want as a premium seller. You want the premium to lose value. You do not want it to gain value. For example, I have 100 shares of NVIDIA. I sell one covered call at, let's say, 10. So I collect $1,000 in premium. Now, if the price of that contract goes to 12.0, then I'm down $200 because I sold it at 10. And Javier, I'll go over those questions in a bit when I'm done explaining this. When you're shorting things, the maximum amount that you can make is 100%. So if I short a stock at $100 and it goes to zero, I make $100 when I buy the share back. Similar to if you're selling or shorting something. If I'm selling it at $1,000, the most that I can make off that trade is $1,000. If it goes above that price, I'm losing $200 because it's valued more than what I sold it at. So if I buy that back to close the position, I'm going to lose $200. However, if the position went to 8.0, then I'm making $200 because I sold it at 10 and then it's less. So if I sell it, I'm going to collect $200 in profit. Now, if the call goes to zero, then I'm going to pocket the entire $1,000 that I sold the contract for. Does that make sense? Any questions on that? And you guys are free to come off mute as well if you want to talk as well. All right, cool. So yeah, in this case, if I was going to sell calls, then what I would do is just, instead of buying puts, I would just sell a call. Same thing. I make money when it goes down. So that's a extremely simplified version of selling premium. One thing to note, when you're selling or shorting something, your losses are infinite. Your losses are infinite. Welcome, Ashton. Your losses are infinite. It's like when we're buying contracts, if I pay $100, I'm only losing. If it goes to zero, I only lose $100. But if I'm selling a contract, my losses are infinite. Meaning, if I sell it at 100 and it goes to 10,000, I lose $9,900. So keep that in mind. Always use a stop loss. And I'll give you guys a horror story that didn't happen to me, thankfully. There was a guy who was selling credit spreads or puts credit spreads on SPX. And for those who trade SPX, you know how SPX moves. You can be up 50% to 1,000% in like 20 minutes if it goes in your favor. So this guy, thinking he figured out a infinite money printer trick in the market, he sold $9,000 worth of credit spreads, put credit spreads. And he was like, well, the market's not going to die in 20 points in the last 30 minutes of the market, of the market being opened. And he went into a meeting without a stop loss. The market died 30 points, and those credit spreads were in the money when he came back. So for him trying to collect $9,000 without a stop loss, he came back to negative $1 million. I don't think he's trading anymore because he owes that now. And if he doesn't pay that off, he can't trade. Or you go to collection and declare bankruptcy. So always use a stop loss, especially when you're shorting. Moving on. Your second question, Crystal, for selecting high dividend stocks, I'll answer that in two different ways. So just because the stock has a high dividend yield doesn't mean you should invest in it. For example, let's go to Tesla, the yield max. Let's go to the monthly. I think the yield on TSLY or the yield max funds are like 10 to 15%. Hey, that looks attractive. 10, 15% a year by doing nothing but holding it. Hey, sounds good to me. But the problem is that your principal or your initial capital can decline a lot. For example, if you bought in up here at $36 thinking, hey, I'm gonna get an easy 10, 15% a year. But look, we're down $21. So you're down 58% on your initial position, trying to get 15% a year. So me personally, I would avoid the high yield ones. Now, generally, people usually recommend, or not recommend, but people usually mention if it's between like 1 to 5% or 1 to 4%, 3% is like a sweet spot, right? So it has a good mix of being safe or safe as it can be. You know, we're still investing, there's risks, but it's safer. Like for example, Apple, I think pays what, 1%, I think their dividend is. I could be wrong. I think it's less now, but I think they pay like $1 per share a year or $1 per quarter, something like that. I gotta double check. Actually, let's double check right now. Let's go to Apple. 25 cents a quarter. All right, yeah. So Apple pays $1 per share. So, you know, it also depends what you're looking for. Are you looking for more growth in your portfolio? Or are you looking for more like income, like dividend income, right? So, one that I personally like, actually, let me see. I might have these screenshots here. So in my Roth, this is what I have in my long-term port. I have Devo, JEPI, or JEPI, MO, which is tobacco. I have O, SCHD. SWVXX is a money market fund. They pay 5.10, 5.15%, I think. And your principal stays the same. It stays at $1. So if you put $10,000 in, whenever you want to cash out, you'll get $10,000 out plus whatever interest accrued. Most brokers have a money market fund. Schwab, actually, let me go to the website real quick. Also, I am in no way endorsing Schwab. This is simply just I use them. But Vanguard, Fidelity, when I use Fidelity, they have their own money market funds. So SWXX is paying 5.16%, and the interest accrues daily, and they pay you out every month. You don't get 5% every month. You get 5.60% for the whole year. But this is dependent on the interest rates by the Fed. So if the interest rates go down, then the yield is probably going to go down as well. So keep that in mind. And they have a bunch of different ones if you use Schwab. If you use Fidelity, they have their own version as well. Same thing for Vanguard and the major banks or the major institutions. So keep a lookout for that. But yeah, UWMC is a mortgage company. In my opinion, they are undervalued. This is not financial advice at all. This is just my opinion. In my opinion, they are very undervalued with the revenue that they bring in. Please do your research if you do want to invest in them. These are just warrants for UWMC. I'm not going to go into that right now. And then I have Vale. Vale, I think it's it's a Brazilian mining company. I think they export like the largest amount of copper in the world or something like that. So SCHD is more like a dividend ETF. So it had a lot of the stocks that I wanted to get anyway, like Coca-Cola, Pfizer, and some other ones that I can't mention. So instead of getting those stocks individually, I just got the ETF to just make it simple. You know, I don't want to have like 20,000 positions, which you can if you want. But again, I just wanted to keep it simple. So once I get to 100 shares, I'm going to sell a covered call on SCHD. Well, actually, That's a lie. I'm pausing my goal to get to 100 shares in SHD, and I'm going to get 100 shares of NVIDIA instead in my Roth, so I can sell covered calls and get and accrue all those gains and profit and revenue tax free until I retire. So I'll be trading more aggressively on my Roth. Anyway, moving forward. So yeah, if you want to like, I guess, get your feet wet, you can get like a money market fund with whatever broker you have if you want to. At least that's what I would do, just because your principal doesn't change. So if you put $1,000 in, $1,000 will stay there. Well, not guaranteed, remember, but these are generally safer investments, as they say. And then you can see how dividends work. They pay out once a month, at least for Schwab anyway. All right, let's go to the other questions. And also, when you come to picking out dividend stocks, just look for companies that you like. Starbucks pays dividends, Disney pays dividends, Apple, Coca-Cola, Pepsi, Target. I think Costco pays dividends, Walmart pays dividends. So you can look into all of that and go from there. All right, let's go back to some of the questions in the chat. Thank you guys for your patience. We're probably going to go over more than an hour today, which is fine. I have time if you guys have time. So Walter mentioned, so I'm in the earlier stages of trading and dealing with a small account. What do you recommend while I work to build my cash reserve? So if you're still early stages of trading, I would focus on paper trading because it doesn't make sense to waste real money or at least lose real money as you're learning. Once you like understand the strategy and then you have some type of consistency and you have a better idea of what you're doing, then you can bring in your live money. One thing that I'll mention though, paper trading, you won't really get a lot of emotions because the money's fake. That has no bearing on you. So as a heads up, when you go to your live money, you might start getting emotional. So that's another hurdle that you're gonna have to get over. So keep that in mind. Personally, for me, if I'm gonna be trading small accounts, I would trade IWM because the contracts are cheap and they're still liquid. So IWM is pretty good. You can get like a 1 or 2 DTE at the money contract for like 80 to $100, or even a money contract.
Do you swing trade IWM?
Heck no. I do not swing trade any indices. The only time I would swing trade is if I'm going to sell covered calls on them. That's the only time I would swing trade indices like IWM, SPY, QQQ, stuff like that. Other than that, I'm not going to swing the regular contracts because the data would obliterate like half the contract's value if it doesn't go in your favor.
Mm-hmm.
So I personally avoid that. So yeah, Walter, IWM, I would do that when you're ready to go live. Thinkorswim has paper trading feature. Webull has paper trading feature. They're both really good from my experiences. So definitely keep an eye on that. Let's go back up here to the next question real quick. So Javier asked, the thing about trading on a 4-hour time frame, does that mean you can only trade every 4 hours, or how does that work? So I only trade the first half of the day. So for example, these 2 candles are 1 day. I only trade this candle. I don't trade the second candle. So I have 2 potential entries on the 4-hour, a 2 up, a 2 down, or 4, a 2 up, 2 down, 3 up, or 3 down. And that's it. I have 4 potential trades. Other than that, if I miss the initial entry, I go on the 5 or 15 minutes to look for a TTO. And Javier also asked, what is a call exactly? Great question. Let's go over it real quick. Let me bring up this chart real quick. Give me 1 sec. All right, here's my options course that we're not going to go fully over because it's a paid content, but we'll go over these slides. I have to download it. Fine. All right, so what are options? So a call option is, as I have mentioned here, it gives you, the investor, the right to buy or sell a stock at the agreed upon price and date. So what does that mean? That means if the price is at 170 and I choose a strike price, 175, and the value of the stock is at 175 or higher, I have the right to exercise that contract and buy 100 shares at that specific price at 175. And again, this is probably going to sound, if you don't know about options, it's going to be super confusing. So don't think that you need to know this immediately. Can I zoom out? There we go. All right, so the options chain. What is the options chain? This is on Webull, but different platforms have it differently. But essentially, this is the expiration date. The expiration date just means that if the stock is not at that specific price, when its expiration, it's going to be valued at 0. The strike price is the price that we believe that the stock is going to go for or against us. The break-even price means that's the price that the stock needs to be at the end of the expiration date to be valued, to be worth something. And then the volume, as we can see here, that's just how many contracts traded that day. And then open interest, as we can see here, open interest is essentially just how many people or how many contracts are currently in possessions of other people that haven't been sold yet. Did that answer your question, Javier, on what a call is? Because it's a little loaded question. All right, while you're getting back to me, I'll go to the next question. Where is my, there we go. All right. I guess another question that you answered, Javier, is learning the basics. That's a little broad. If you're going to learn the basics, just to keep it super simple, so I don't talk for 20 more minutes, read the Candlestick Bible. I think I sent it to you. Start reading that. It'll give you a lot of fundamentals regarding technical analysis. Read the Strat ebook as well. And you can start there. And then, slowly build from there as you continue. And again, like I said, you can paper trade on TradingView, Thinkorswim, Webull, all that stuff, just so you understand how things are moving along and stuff like that. You would like to know how much the course costs. The course starts at $147, or not that it starts, it is $147 flat. Keep in mind, the course is mainly based on, it's based on options. While I do have material, I go over like selling premium, the strategy. I have also, for those who already had my course, I've been updating it recently, so definitely check out the updates. I added my emotional intelligence webinar there, the strat scanner, my playbook setups, and resources. So you'll find the Candlestick Bible, trading journal templates, so on and so forth in there. But in the sense of like basics, like how to read a candle and stuff like that, definitely consult the Candlestick Bible. My course, again, it's mainly focused on the strategy that I use and options, and some emotional managing and stuff like that. But basics, Candlestick Bible and YouTube for now. You can definitely get this just to understand options better, but also, you know, start studying on YouTube, like, market structure, things like that. If you're going to be learning the strat, I'm going to tell you right now, don't go on YouTube looking for strategies because you don't want to overwhelm yourself and you don't want to confuse yourself. And don't use spaghetti lines on your charts. Whoever uses them in here and they work, do not let me dissuade you. Please keep on using them. Just personal preference. When you're starting out, you don't want all those indicators. You want to focus on price action. Price will always tell you what's going on. So keep that in mind. All right, cool.
I got a question for you.
Go for it.
So do you use broad information as your there it is right there.
As my what?
Do you use broad information as your levels?
As support and resistance, yeah. I also use Fibonacci retracements, as you and I have spoken before, depending what I'm looking at. So I use both Fibonacci retracements and the broader information. So for example, for Tesla, you'll see me have like additional targets that you may not see on your chart. If you do the strat, that's because I also use Fibs for these extra targets.
Yeah.
Chart when the market opens for accuracy. I always chart the night before for my watch list, and then I just trade it the next day. It depends on your strategy and what works for you. For me, I chart before because remember, we're just using regular trading hours for strat. So I'm really just getting those levels the previous day. Then I'm just executing the next day. Hey, Javier, thanks for coming by. I appreciate you and your questions. Enjoy the rest of your night. What was I saying? Yeah, so I get my levels the day before and then I just execute the day after, or the next day. So I already got my levels for tomorrow, today. And then tomorrow I just wake up and then I execute when the market opens. I used to do my watches in the morning before the market opened, but then I like having more time in the morning to do my routine and all that good stuff. So I started doing my watches the day before, and it takes me like 5-10 minutes to do it anyway. So pretty straightforward. Kia mentioned, so I chart at night and mark my levels. The market opens and there's a huge gap up or down. I kind of get confused about the structure, especially if it gaps above or below my levels. So Kia, that would be when we would look for a TTO to get in. So let's say for IWM, oh, whoops, I posted that in the chat. Let's say for IWM, let's see if we could find, all right, so right here, we have a gap day. We have one, what day is this? 5-3 and 5-6. So let's go on the 5-minute. And let's go back, what was that, last month? That'll be, let's do 30, no, I have to do 90 days. All right. Last month on the 5th. Let's see if we got a good one. All right, this is the 6th, and then this is the 3rd. So the 3rd, in this case, for this day, it wasn't a clean TTO, in my opinion, because we just have a big move down and then a reversal back up. Sure, you could have taken this if you wanted, because we're bullish on the 4-hour, daily, and the 1-hour. So you could have taken the reversal back into continuity on the 5-minute, and then it hit the first target for the TTO at the day high, and then it just got obliterated. So this, to me, this is a failed TTO. A completed TTO would be when it completes a TTO, so it hits this high, and then it continues heading higher. In this case, it was like a completed failed TTO because it did hit the TTO target, but it just kind of died out and chopped the rest of the day. And then the next day when it gapped up, you know, our entry would probably be down here, but it gapped up. So you could have taken this 2 down, 2 up. Again, it wasn't the cleanest TTO like I showed earlier. Like for example, let's go here real quick. So let's say for this TTO, right? We can see that we have a push up, a pull down, a double inside bar. We take that to the upside, right? That's a TTO right there. This is a TTO as well, but not as clean as how I prefer it. I like my TTO to look like this. It's almost like a triangle that's being formed, and then it heads higher. Or another example, like this will be a fully completed TTO. We get the push up, we get the push down, we form the triangle, and then we keep on heading higher. This is like picture perfect TTO. And it printed a hammer, I'm taking that. No questions asked. That makes sense, Kia?
Yes, it made a lot of sense. Thank you.
Absolutely. So don't ever feel the need to like chase trades because remember, TTOs exist. We just need to wait for them. And that's it. Cool. All right. You use the strat and the same strategies for futures. I do not use the strat for futures. Only one setup I use for futures, and which is strat based, which is the W. So we get the push down, the push up, the push down. We get the higher low. I took the reversal back up. This is the only strat entry that I take for futures. I do not take any other strat entry. I mainly use Fibonacci retracements with the way that Trust My Levels taught me. Shout out to him. Makes trading super simple. But yeah, I use a strat for options, and then I use Fibs and some ICT concepts for futures. To me, I do know people who use the strat for futures, and it works great for them. I just personally, excuse me. I just personally find Fibonacci retracements and ICT concepts to be a lot more efficient for trading. I'll show you guys an example of a setup that I finally got down on paper. So this was on the 1 hour that this one printed on. So whoever's watching on YouTube, you're welcome. Here's one of my bread and butter setups. Super high win rate. Congratulations for $3.99. You're welcome. Give me $1. Anyway, so what this is, I just named it the Tweezer model. I don't have another fancy name for it. But the Tweezer model is an even earlier entry than the W model setup. So the Tweezer flows into the W, then the W flows into the W retracement setup. So there's 3 different entries that I can get in on these 3 different setups that come together perfectly. So for the Tweezer model, as we can see here, what we're going to look for is a Tweezer bottom. It could be a Tweezer top too. I just only taken them to the long side. So the first thing we're going to look for is a low that is made. As we can see here, a low is made. And the second candle has to be 75 to 80% or more of the previous candle, right? And then you also want to see that the bodies of the candle like this are very close, almost flat with each other. Like this. You see how these 2 bodies are flat? You want to see that here. You want to see them as flat as possible. And then as soon as it starts retracing back up, as soon as price reverses back down, you're going to draw your fibs. You're going to draw your first point down here. You're going to draw your second point up here. So the swing low before it reversed to the upside and the swing high before it reversed to the downside. So we have a 2 down, 2 up. This is the lowest point before it reversed back up. there's a 2 up, 2 down, the highest point before a reverse to the downside. And then once I draw my fibs, specifically the 70 fib, as soon as I draw my fib, I'm going to have a buy order sitting right here at the 70 fib. So I'll do a buy limit order and place that on that fib level right there. My stop loss is 30 points, which would be there. And then for this specific setup, I'm going to take profit every 30 points that it goes in my favor. I do have it automated. I do have it automated for futures where as soon as it hits 20 points or 25 points in my favor, it moves my stop loss to break even plus 5 points. So if it does come back, it's not a losing trade, which is why I love futures. I automate this entire trade. I have auto break even and auto trail set up. So after it hits 20 points, every 10 points that it moves in my favor, it moves my stop 10 points in profit until I get stopped out or until it hits my max target.
You have that set up on Thinkorswim?
Thinkorswim, unfortunately, does not work for Thinkorswim. I messaged Schwab. They said it doesn't exist yet.
Okay.
They are, from what I heard down the grapevine, you didn't hear from me, do not at me. But I heard that they are coming up with new advanced order features. I don't know when, but now that like they've finished like bringing over all the TD Ameritrade clients, they're going to focus on updating Thinkorswim and the platform and stuff like that. So we should be seeing updates coming soon, more consistently. So Thinkorswim doesn't have that, unfortunately. You can set up like a bracket order. So for example, I learned this like last week, I think. Let's go to futures real quick. So active trader, bring that up. So right here, where it says template, it sets a single right now. So if I do trigger with bracket, I can put a bracket order immediately to be, let's say, 10-point stop loss, 10-point take profit. So as soon as I get in, like, let's say a market buy, as we can see here, either buy limit or a buy stop, you can see on the right side, it has my trigger, my stop loss and my take profit. So I literally get in immediately. I don't have to like get in, then set my stop loss, or I don't even have to right click and then buy with OCO bracket and then manually input that. I just have my template here. And then you can save your template. You can name it whatever you want. And then let's say when you bring this back up, you hit template. Actually, let's make one up real quick. Let's do 15 points, take profit, 15 points, stop loss. Let's save this as 15 point. So now if I want to get into a trade quick, I hit template, 15 points, boom, it already has my settings ready to go. Done deal. Super simple. Now, what I wish, and I hope they add this in the future, for Tradovate, you can make really advanced ATM settings or bracket order settings. Like this is the one that I have for the setup that I just mentioned. So as soon as it hits 20 points in my direction, it's going to move my stop loss to break even plus 5 points. And then after it hits 20 points, I have my auto trail, my trailing stop that kicks in. And then every 10 points, the frequency, it moves my stop 10 points in my favor until I get stopped out or until it hits my take profit, whichever one comes first. If I'm not managing it, I'll leave my take profit at 50 points. If I am at the computer, I'll put 100 points and then scale it as it goes in my favor. And then here, you know, I have all my different ATM settings. So if I put the retracement, I hit sell, it already is my stop loss and my take profit. I could literally walk away and go to sleep and the trade will manage itself. I don't have to do anything. So I love that about futures.
Nice.
Cool. Brenda, your question, you're new and struggling with everything. I'm going to ask you some questions on that. What does the chart setup look like? How to transfer knowledge from TradingView chart to an actual trade? So let's break these questions down, Brenda, and you can come off mute so you can better help me understand. When you say new and struggling with everything, like how new are you? Like, are you just starting out? Have you been like looking at the charts for a while? Anything like that? And you can type in the chat or come off mute. You should be able to talk. I don't think I have everybody. I don't have everybody forced muted, so. Also, you guys can crack jokes on me and make fun of me, but my eyes are sensitive, so I'm gonna look silly for the rest of our class. I gotta put on my red tinted glasses so my eyes don't hurt with these screens. All right, that should work for now. All right, we'll make it work.
What's the Marvel figure? What's the Marvel figure that has red goggles?
Say that again, the what?
What's the Marvel figure that has the red goggles?
Cyclops?
He's blind.
Yeah, Cyclops.
Cyclops.
Yep. My friend said I look like Mr. Freeze from the old Batman. I'll accept any of those. Cool. I want to be so good at this that I need red goggles. That's how you know you've made it, when you need red glasses to reduce the eyesight strain. All right, so Brenda, whenever you come back, or hopefully if you're still here, you can answer that. If not, I'll just answer it as I see it here. So what does the chart setup look like? Again, I just need more information on that. I don't really know what that means. Is that like market structure? Stuff like that. I don't really understand that question fully. How to transfer knowledge from TradingView chart to an actual trade? Great question. So let's go step by step. Let me bring back Thinkorswim. So let's just say that I'm looking at YM, and this could be whatever charting platform you use. Let's say there's a 2 down here, and then I want to get on this 2 up. So what I can do is I can set a buy stop. I can set a buy stop order. So as soon as it hits that level, it automatically gets me in the trade. Or if I'm trading options, as soon as it triggers the trade, I'm buying market or I'm buying the ask or a limit order, one of those three, depending on what's going on. So, so, you can see it that way. If I'm trading options, if as soon as it triggers, let's say like a 2 up, I'm buying calls at market or I'm buying the ask for that specific contract. Hopefully that answered your question. All right. And you also mentioned how to transfer knowledge from TradingView to an actual trade. Can you trade any time of the day as long as you see the setup? You can trade any time of the day, but you want to trade during your most profitable times. Like people who have worked with me, they know like how I make them journal. We have to get as much detail as we can, right? So one of the prompts when you're journaling is, what time did you take the trade at? We need to figure out what our most profitable times are. I only trade the first half of the day from 9:30 a.m. to 12 noon Eastern because that's my most profitable time. More time on the chart does not equal more money. I get burnt out if I trade anything after 12 noon. So I just do 2.5 hours maximum a day. Maybe I'll squeeze in a little extra 30 minutes if I'm looking for the W setup at like 1 p.m. if it sets up. If not, I'll just call it a day and come back the next day. Some people can only trade the afternoon. Again, it really depends. It really depends on what works best for you and your schedule and things like that. So for me, most of my money comes from the first half of the day. So that's all I trade. It helps not overwhelm myself, and not use so much mental energy, all that good stuff. So all right, next question. Let's see. Donita is not here, so I'm not going to answer that question. Walter was here. I'll accept it since you showed up. Walter asked, picking the right strategy. So again, I'm biased. I trade the strat. The three strategy that I use, again, is the strat by Rob Smith, Fibonacci retracements that Trust My Level taught me, the way he uses them, and ICT concepts. Those are the three ones that I use. For options, strictly strat. For futures, combination of strat, ICT, and Fibs. Mainly Fibs though. I use ICT to like, it's like a cherry on top, or to give more confluence for my trade. Kia, I don't avoid the first 5 minutes anymore. Check out the in the course that I updated. Check out the section that says options course update. It'll tell you exactly how I trade now. But essentially, if the trade triggers the first like 5 minutes, I'll get into the trade. But with a what do you call it? With a reduced size. So instead of using 10% in my trade, I'll use maybe like 5 or 7% because I'm getting in so early. And I definitely know you don't avoid it, because the move is almost gone, or the majority of it is usually gone in the first 15 minutes. So I started trading the first 15 minutes. So 4 hour for initial entry, or 15-minute for TTO. Keep it simple. Cool. All right. What's a minimal amount YM can be traded for? Great question, David. So I'll answer that in different ways. So where is my Thinkorswim? There we go. So it depends the broker that you use, right? So for Schwab, Thinkorswim, they come at your wallet. To trade one contract of YM, you need to have $13,398 in your account to trade one contract. However, if you use, and David, after this, in the Discord, if you go to the futures guide, I have all the information there. But an example for Tradovate, they require a lot less. So on YM, you only need $500 in your account to trade one contract. So it depends on the broker that you're on. Schwab is very much conservative. They don't like risky traders, or at least I'm imagining. I don't know, but I'm just assuming. But you know, they mainly cater to, well, they cater to everybody as far as I know, but more so what I mean is they're not as lenient with their margin requirements compared to other brokers. Like YM, $500 that you need for one contract. Schwab, almost 14K. So if you are going to start out, me personally, I use Tradovate. It's very, very rare that I would use Thinkorswim for futures because the margin requirements are so high. I don't want to put a 14K for one contract when I can get two contracts for 1,000. My position size for YM is 2 to 3 contracts maximum. You can also use prop firms if you want as well. So you don't need, you can pay like $40 for like a 25K account. And you can use that to build up your capital. What I would say, if I did start trading from the beginning, I wish I would have known about prop firms, just because it's a good way to start out with basically almost no money, and you can use the payouts to fund your own accounts. So what I do, I mainly trade on the prop firms, and I'm trading futures, and I just use that to fund my own accounts and pay myself that way as well. So definitely a great way to amass a lot of money, or if you don't have that much starting out. So good thing there. You gonna ask something, Kendrick? You can talk.
Oh, I'm just looking at it.
Oh, gotcha. Let's see. Darlene, what prop firms do I suggest for options? Kia, I'm not sure. Actually, this is a great opportunity, Kia, since you trade IWM. IWM has futures, which is our good old buddy, RTY. RTY is the futures of IWM. So if you're trading strat on IWM, you can just trade strat on RTY the same way you do. And the margin requirement is $500 for one contract of RTY. Or you could just get a prop firm and then just trade RTY. Per point, RTY is $50. So there's 10 ticks in 1 point, or every point 0.1 or 0.10 that it moves, you make $5. And it moves 10 ticks in a point. So you make $50 per point. Yeah, RTY is the Russell futures. That's the ticker symbol for the Russell 2000 futures. So it's RTY, that's the futures. IWM is the ETF of RTY. You can own it and you can trade options on it. For RTY, you can trade the futures itself. So I trade it sometimes, since I enjoy IWM sometimes. So RTY, definitely good. But I mainly trade YM. You gonna mention something, Kendrick?
It might just be picking up like background noise or something. I'm moving my
Oh.
computer around.
Gotcha. All good. All right, let's see. Is Aisha here? I don't see you. I wish you were here, because the question she asked was really good. But I guess we'll have to wait for next time.
What's
Like I
her
told-
question so I could ask the question?
Oh man. You know what? Just because it'll be beneficial for everybody, I'll let it slide this time.
All right.
So she asked, she's currently struggling with getting out of drawdown on a funded account. She also asked how to stop hesitating on hopping in trades, having more confidence, as well as a detailed explanation and description or example on limit orders, placing limit orders, and canceling limit orders. I'll go over the trade stuff first, because that's simple. Again, it depends on what you use. If you use Tradovate, pretty straightforward. Click on the chart, buy stop, sell limit, easy peasy. If I want to take the trade off, I can go on the chart, hit the X, it takes the trade off. Or I can just exit and market, exit at market and close all. This flattens your position and cancels any pending orders. So you can do that as well. Easy. Or you can use DOM over here. Let's hope it doesn't buy market, because it likes to do that sometimes. What price are we at? All right, we're up here. So let's say I want to buy limit. So boom, I literally clicked on the DOM and I'm already have a pending order sitting there. If I want to cancel the trade, exit, market and close everything. Trade is gone. Easy. I also made a video on my YouTube on how to use Tradovate and set up the ATM or bracket orders. So definitely check that out if you guys haven't already. Cool. So currently struggling with getting out of drawdown on a funded account. So the biggest thing that I always tell people, and this will answer the other questions on like not hesitating and having confidence, stuff like that. You don't want to focus on the money. When you focus on the money, you start messing up and getting emotional and getting in your own head. So as you can see with Tradovate, I don't have my P&L. I don't look at my P&L at all. The only time I look at my P&L is when I'm uploading my trades to my journal. Other than that, it's not about the money. If you're focused on the outcome, you're going to have a hard time. You have to focus on the system, the setups, the strategy, managing your emotions, keeping yourself cool. Because if you're looking at the money, you're like, oh my God, I'm almost at the payout. I just need $100 more. Let me just get into a trade and just get it out the way. Then you lose money. And then you lose more money. And now you want to get that money back. Now you're making mistakes. So you don't want to focus on the money. You want to focus on the process and the system because that's where the money is coming from. You don't make the money and then you follow your system. You follow your system and you make the money. That's how it is. Now, if you're in drawdown, what I would do is size down until you can bring your buffer back up from your drawdown. So let's say if you start at 100K and you're like at 99K, if you're using 2 contracts, I'll probably use 1 and slowly build the account back up and go from there. And then once you get back to like out of drawdown, you can go back to your regular size. And, you know, again, focusing on your system and your setups. Like, for example, where is this? Yeah, Michael knows what I'm talking about focusing on the system, because him and I had a chat the other day about something that he did. I won't blast you in front of everybody, but it's all love. So for example, with the Tweezer model, I already have my trade planned out. I already know exactly what to look for and exactly what I'm doing. So on this trade, unfortunately, I missed it because this triggered at 7 a.m. I will sleep. Hey, Ashton, thanks for coming by. I appreciate you coming out. And again, any questions, please reach out. We're here to help. If you're not in the Discord yet, definitely join us. We'll love to have you. So actually, let me post that link one more time before I forget. One moment, please. And where is that link? All right, let me go back in the chat since I posted it up here. There we go. Copy link. Boom, it's in the chat. $25, one-time payment to join forever. It's not recurring. Moving on. Oh, whoops, I sent a direct message. That's not what I want. There you go. All right, cool. So going back to the setup. So like I always tell you guys, the importance of your playbook. Make your playbook so you know exactly what the trades are, exactly what to look for, and exactly what it looks like. I already know as soon as I get this tweezer set up on the 5-minute, 15-minute, or the 1 hour, I'm taking this. No questions asked. I'm drawing my fibs. I'm putting my buy order, setting up my ATM or bracket settings or order, and I'm letting it do its thing. It's either going to win or it's going to lose. I already did my job in getting into the trade. There is nothing else that you can do once you do that. It's up to the market at that point if you're going to win or not. It's not up to you. So to answer the question of how to stop hesitating or hopping in on trades, you have to understand there's only two outcomes. You're gonna win or you're gonna lose. That's it. Again, as long as the setup has a high probability, that's all that matters. The retracement setup, the tweezer model setup, the W, they all have high win rates. I have lost on those trades before, but my wins have always outweighed my losses. Like, for example, for the tweezer, maximum, I lose $300 on this trade. If I would have taken it that day and I woke up at 7 a.m., which I'm not gonna wake up to take a trade, but if I took that trade, that thing went 300 points. I wouldn't talk to y'all for a month if I made 300 points on YM. But anyway, you know, 300 points. Actually, not even that, because this is just a big W, right? So even if I went for my first target at the center of the W, that's still 240 points. And I'm only risking 30 points. So even if the setup loses, I already know the next time it appears, I'm going to be making more money than I lost anyway. So understand that losses are part of the business. You will not escape losses. If you came to trading to escape losses, this is not for you. I'm going to tell you right now. Let's be transparent, shall we? Let's go to my results for the last 3 months. For May, I lost 1, 2, 3, 4, 5, 6 days. I think April was my best month, where I think it was 2 red days. Yeah, 2 red days in April. Let's go to January or February. That's still April. I can find this. All right, February. I probably have to get the other one, but 2 red days whenever I posted that. January, I had 1, 2, 3, 4, 5, had 6 red days. So remember, losing is part of the business. You will not escape losing. But once you have it down to a science, your setups, you're going to take the same setups day in, day out. I look for the same setups every day. Again, keep trading simple. The market is not random, it's programmed. All you need to do is find the program. The tweezer model, programmed. W model, programmed. Order blocks, programmed. All of that stuff is programmed. You just need to find it, and that's it. And just take them. You're gonna go ahead.
I'm sorry. Where do you have your tweezer information and your W's?
Go
set up?
to the in the group. Go to Educational Center. Playbook setups. It'll be the last channel.
Right.
And you'll find all the details. And I made a video on this too. So, again, just find the specific setup that you take with the 3 1s, 2 1 2s, whatever it may be. Look at your journal. How many of them won? How many of them lost? And then you can determine, all right, even if I take these L's, overall, I still won 7 out of 10 trades. So I'm still going to come out on top. I'm good. So always remember, there's only 2 outcomes. You're going to win or you're going to lose. As long as you win more than you lose and you limit your losses, you'll be fine. Having more confidence, I'll answer that a few different ways. Well, people that I work with and some of them that are in here, as I've told them, when you're trading, you are trading, not you and your buddies, you and the group, you and your friends. It's you on the chart. That's it. You want to just focus on what you're doing and not get distracted. Because I've been in situations where I'm trading with a buddy and he's like, I'm going to go long. But for me, I'm looking to go short. So now I'm confused. I'm like, all right, should I go long with him, or should I go short with my plan? So now what's the word that I can't think of? All right, my brain turned off. Whoever can help me out with the word that I'm trying to find. Yeah, I'm conflicted. Thanks. I'm conflicted on what to do now. But if I'm trading by myself and I take the short, cool. It's going to be a win or lose trade. But if I take a trade that wasn't mine and then I lose, I'm gonna be double upset because one, I was on the right track with what I originally saw. So you always want to trade by yourself, and then you can come hang out with the group after you're done trading. That's why in my group, you'll see it's quiet for most of the day. People don't talk in there because they already know. Trade by yourself, then come through. I used to live trade with my group as well. I stopped because it just got too confusing. I'll talk a lot as opposed to like focus. And then my boy that I trade with, he trades ICT. I don't. I trade the strat and Fibs and some ICT concepts. So specific trades that he takes, I don't take. So I'll be like, all right, I'm gonna go long. He's gonna be like, I'm gonna go short. So it was too much noise. So I stopped. You have to know yourself and really make trading work for you, depending what works for you. I know people or leaders who live trade and it works for them. I cannot do that. I learned that about myself. Maybe in the future, since I'm a little better at knowing what I'm looking for and things a little more in tune with what I take, so it's easier. But again, maybe down the line I'll go back to live trading with you guys, but don't hold your breath. I'll say that. So that can work. You can say something, Patrice?
Yeah, I was gonna ask, could you do like 1 day trading live? Maybe 1 day out of 2 weeks or something like that.
I'll
2
tell
days
you,
out of-
I'm going to New York in August. I'll trade live that week
in August.
in August. The first week of August, I'm gonna be in New York because I got to get some stuff to bring down.
Okay.
So I'll trade live with you guys. First week of August. We'll see how it goes. I'll do it as a test run. The second part of confidence, it's really just taking the trades. Like for me with the Tweezer model, when I started noticing that pattern, I'm like, interesting. Let me go back in the chart and see if I could find other times that it happened. It happened on Friday. I think I did a trade recap on this. Was it on Friday? I think it was this. Hold on. Was it this one? I think it was this one. Yeah, so I didn't get into this one, but I noticed it in the afternoon. So we have, like I mentioned, we get the move down, a candle where the wicks or the bodies are almost flat with each other. And then the candle is 75, 80% of the previous candle. We draw from the swing low to the swing high. Oh, whoops, that is not my fib tool. Yeah, swing low, swing high, put a buy order at the fib level there. And it went 42 points in our favor. That's a winning trade because my first target is 30 points. So with when I first discovered this, I'm like, cool, let me back test it. Let me see if I could find more of it to see if it's a valid setup. And I went back like 2-3 months and I saw that every time that pattern happened, it would maybe like I've seen it fail twice, maybe 3 times, or like 15 times that I've seen it. So I'm like, all right, the win rate is there. And on average, if it does go against me and it's invalid, it'll be like 30 points. That's why my stop loss is 30 points on that specific one. And as you guys have seen, I've added like some notes for the other tickers that I've seen. for the specific trade setup. So like ES, it usually gives minimum 4 to 5 points, stop loss 7 to 10 points, and Q 15, 20 points minimum for take profit, and then stop loss 15, 20 points. RTY, Kia, since you're probably going to be trading that for futures, I think RTY was like 3 points stop loss and 3 points you could start taking profit at, if I recall correctly, something like that. So something to keep in mind. And then to go back to the question on, the confidence, once I discovered the setup and saw that it was valid, I paper traded it for a week so I can actually execute it every time it appeared. And then after the week, I'm like, cool. I took the trades, day one, most of the time, I made this amount of money, I'm good. Now let me go in live. So I'm going by stages. Because if you find the setup and you're going live immediately, you're still going to be nervous. Like when I discovered the W model, I was super nervous because I went into it live, like when I discovered it. And I'm like, whoa, let me take a step back. Let me paper trade this for a week or two until I get comfy. And then once I got comfy, I went live. And now as soon as I see the W print, I'm in there. It's gonna lose or win. It is what it is. All right. I think that answered your question, hopefully. Did you guys have any other questions you wanted to go over or anything that comes to mind before we wrap up? You can come off mute, post it in the chat, whatever you want. Unless you guys are typing. I wish Zoom would like tell me people are typing or not, because I'm kind of just here like, are you guys typing? Of course. My pleasure, Shneya. If that is all for today, no more questions. I appreciate you guys for coming out. Before we wrap up, as I always do, what was everybody's biggest takeaway from today's session? Type it in the chat, come off mute, whatever you want.
I jumped in a little late to the video, but the tweezer method is definitely looking good.
Sweet. Yeah, man, like, I discovered this, so I'll try not to go off on a tangent. I just love this stuff so much. So I'll try not to keep you guys any longer. So when I first started, this like specific model developed pretty, like it was built upon. So let me go to US 30 since my charts are clean there, which is the same thing as IWM anyway. So for the W setup, actually, I'm not even going to bother looking for it. I'm just going to bring up this picture. Let's go to, where is it? ICT. And let's go. So apparently the W is an order block that somebody told me about. So pretend this is a W. We get the move down, the push up, the move back down, the move back up. I used to get in on the retracement right here. So when price will retrace back to the center of the W, I would get in there. And then somebody bankroll that was with me in Trust's group, he was like, hey, bro, that's a good entry. Where I actually get in is down here. So I'm like, oh, cool. I can get even earlier into the W trade. And if I miss this, then I can just get in on the retracement, take it back up. For strat users, we just see this is just a TTO, as we can see. But anyway, I used to get in over here on my first entry and take it up. But then when he put me onto this entry here, I'm like, cool, now I can get in even earlier. But now with the tweezer, now I can get in even earlier than that. Oh, whoops, not NQ. Let's go back to YM. So as you can see with the tweezer, you know, with the tweezer, I'm getting in even earlier because with the with the W, I'm gonna enter in up here on the 2 down, 2 up reversal. But with the tweezer, I'm front running the move. So I'm catching the higher low on the W before the W forms. Mike, if the setup is for options, nah, this setup can be used for anything. Forex, crypto, futures, anything you want. Remember, this is just based on price action. You can use this for anything. For example, let's go to QQQ. Was on the 1 hour extended. Granted, this is extended hours, but let's pretend it's live. So the low, oh, whoops, that is not my thing. I think the one for tech didn't hit the 70 fib. Yeah, it didn't hit the 70 fib, it hit the 50 fib. But if you're trading options, you would just buy market as soon as it hits that level. Or if you're buying shares, you just, put a limit order there, whatever you want. So this works for anything you want. It doesn't matter. It's all applies to anything. Like even the strat works for anything. I use it for crypto. I use it for options. I used to use it for futures. It's based on price action. If it has candles, you can use it. Cool. So another takeaway, once I am in profit and trend, move my stop to break even. Absolutely. You never want to let a winning position go red. And yeah, David, paper trading, 100%, you want to focus on paper trading. Like my cousin that's in here with us, Michael, I'm teaching him how to trade from scratch. And he's still paper trading. And I'm gonna have him keep on paper trading until he gets consistent. And then we're gonna go live. So, paper trading is a fundamental part when you're starting off, and then you can go in live and stuff like that. Cool. Any other takeaways before we wrap up? Yep, if the market gaps up or down, wait for the TTO. Because if it's going to be a trend day, it's going to form. I'll tell you that. Just have to wait for it. All right, looks like that's pretty much it. Again, I appreciate all of you for coming out and asking all these questions. We did go over by like an hour, but hey, I appreciate everybody's time. Thank you again for being here. For those watching the replay, feel free to join the group. I'll post a link in the description for the group and any other my products and services. Feel free to book a session with me if you want to work together. If you're not really sure, or if you have more questions for me, you can book a discovery call, which is free, and we can just talk to see exactly where you're at, what you need help with, and we can, go from there. For those who did attend today, if you don't have my course and you want it, send me a DM and I'll send you a discount code, and we'll go from there. Anyway, thank you guys again for dropping by. Appreciate you. Enjoy the rest of your night, and I will see you guys in the morning. Take care.